Hey, good afternoon. Good to be with you. Brad Macbeth here from The Simple Plan with The Simple Plan Live. Today we are on step 6 of our journey on the 7 steps to a safe, secure, and positive retirement in the Don't Worry, Retire Happy series. Step 6 is long-term care. This is a question that concerns everybody, and many of us have had some experience with this, dealing with parents or grandparents perhaps, as they've gone through the later stages of life and seeing what happens, but not necessarily really understanding the mechanics behind it. You can have a plan for long-term care, and you really should, because life can be much better in the latter days of our life if we have these options than if we don't. So we're going to look today at how we can put together some options and just exactly what's going to happen with long-term care, whether we have resources to address it or not. And this is again step 6 in our long-term or 7-week series, 7 Steps to Retirement Security. We've been through the planning, the government benefits, hybrid retirement, dealing with inflation, which of course is now boomed up to, I think we're at what, 7.5 or 7.8% in Canada right now. Securing guaranteed retirement income, we talked about last week, and we're going to do some more one-off shows on that because it's a very interesting and complex topic, but one that can make a huge difference for you in retirement. And today, of course, we're looking at planning for long-term medical costs, long-term care. I want to thank our sponsor, as always, the Simple Plan community. We are thankful to them. We are there to walk with you in your finances. There's a community there. We walk together, looking to make the most of our finances through all stages of life. So join us there if you will. It's free. Bring your questions. We have regular topics that we run in there, questions for the people that are part of the community. And we're always there to help you figure out exactly what you want to do and where you want to go with your personal finances. All right, so let's take a look at today's tools. Yes, I think we're over there now. All right, so one of the things I wanted to mention, first off, is that long-term care is primarily in the realm of the provinces. So I'm going to talk today about what goes on in British Columbia. Whatever province you're watching this in, you're going to find that it really is unique to your province, and so you have to look up what happens in your province. I can tell you that British Columbia's situation is not the worst in the country and not the best, but I can also tell you that none of the, if you don't have resources in place to manage care in the latter stages of your life, you're going to be at the mercy of whatever your provincial government does. And none of the provinces do what we all wish they would or could. And so what you find is they're doing the most they can with the very limited resources that they have, and that system is taxed and stretched. And of course, that was never more apparent than with what we went through during COVID. We saw how many elderly people perished in long-term care facilities. In fact, I believe the majority of people who perished through COVID were people that were in long-term care facilities. Not every long-term care facility had that problem, but many long-term care facilities have staffing problems. They have maybe overcrowding problems, but if not that, they just have a lot of people living one on top of the other in those places. So however we can, we want to try to get the most of things working for for ourselves and for our families. We want to be able to take care of our loved ones and to be cared for in the latter days of our life. Okay, so let's go back. So all I did, and I just recommend this, I asked a simple question there in Google, how much is long-term care in BC? Now, watch out at the top here. Of course, you get a bunch of ads. You get ads for senior facilities that you can pay for. All good, no problem there, but that's not really what you're looking for. You're generally looking for something offered from your government so you get the actual information about what they do. And so that's what I scroll down to. You scroll past the ads and get to, in this case, Long-Term Care Services, Province of British Columbia. So I just want to step through a bit of this. These are not beautiful visuals, but I want to step through the information that's in here because it's going to help give you an understanding of what's going on. Now, again, I don't have the exact fact and figures for this, but what I can tell you is that there are really two types of accommodation that are government funded. And the first thing that most people, or that many people will say, is that when you say, well, how are you planning to be cared for in your old age, should you need care? And I believe it's somewhere north of 40% of Canadians that end up needing some form of care in the latter stages of their lives. And most people will give the answer that, oh, well, the government will take care of me. And that's true to a point. The real issue is that the level of care that you want for yourself in that stage of your life? And I can promise you, it's not the level of care that your loved ones want for you in that stage of your life. If you've had a parent or a grandparent who's gone through care and all they had no money, they were really entirely dependent on government to provide for them, for many people, it's just less than we wish it was for the people we love. So in British Columbia, we have two kind of tiers of care providers that provide government subsidized placements for people in their old age that need care. And so some of those are straight government-run facilities, and others are private facilities, but the government has purchased or has allocated resources to subsidize rooms in those facilities. Now, both are finite and scarce resources. It's difficult to find accommodation when you need it. In fact, I was having a discussion just before I came on today with someone close to me who had been through a lot with, seen a lot with their grandparents, and it was difficult. Even though they had resources, it was very difficult to find accommodations suitable to them, and I'll get into why that can be problematic. Also, there was waiting lists for whatever they wanted. Even having money where they could have purchased what they needed, they still were finding it difficult to find a placement. It took a lot of time. So just to clarify the terms, long-term care services are 24-hour services with professional medical supervision and put right here in a protective, supportive environment for people who have complex care needs and can't be cared for in their own homes or in assisted living residence. So we have two kind of levels of support in British Columbia that have medical assistance. One is called assisted living. That's for people who need some medical supervision, but don't need really constant medical supervision. And long-term care is residential care where there is a perpetual medical attention provided, including clinical support services. And so, this is really the choice is publicly subsidized or private pay services. And private pay services are just that. You can go and find a place. They are licensed, they are regulated. Again, we saw some problems with that, but that's where you're going to be able to access the higher level of care or the more comfortable or luxurious level of care, if you want to call it that, if you have money to do so. So publicly subsidized are accessed through what we call health authorities here in British Columbia, but whatever your local health infrastructure is called, the government-run health infrastructure is called, that's who decides and allocates these resources. You have to meet criteria, and you go through a formal assessment conducted by the health authority. Here's a bit of an insider tip. In these days of very scarce resources, the government, the healthcare infrastructure very much looks to the family to provide support if they can. And the more support that you'll say that you're willing to provide, the more support you will end up providing. So that can be a wonderful thing, a really good thing to do. But if you're not up for that or not inclined toward that, then you really need to be firm with medical authorities that that you're unable to provide care. Otherwise, they will just default to you providing the care as far as that's possible. Obviously, in a long-term permanent care type of situation, that goes beyond the needs or scope of what family could provide in the home. Now, private pay, so that's it. You go through a formal assessment, and the government agencies decide and will tell you where you can go. The private pay services, you just go directly to the service provider and you meet their criteria. You can shop and compare for services. This is what requires money, and it can require a lot of money. You're probably looking at the neighborhood of, well, minimum $3,000, but probably closer to $4,000 to $5,000 to start per month if you're in an individual living situation. If you're doubling up with people, you have a roommate or whatever, then you may not pay as much. And that can go up and up and up from there to $10,000 a month and beyond for things like what's called memory care in a locked or a secure facility. So, for example, people with advanced stages of dementia, Alzheimer's, those kinds of things, who need to be in a locked facility and need constant care because they're not really cognitively capable of managing themselves. So those are your two types of care. Now, there are many spaces, particularly I think perhaps in the assisted living end of things, where private pay facilities are being subsidized by government money. So assisted living has hospitality services and personal care services. This is for people who can live independently, mostly, but requires some support due to physical and functional health challenges. So maybe they need help getting in and out of bed. Maybe they need help getting dressed or those kinds of things. There's lots of different situations that that can look like. Now, I want to reiterate that I'm not an expert in this area. I'm really just trying to situate for you in your mind what you might want to be thinking about in terms of accumulating resources to be able to care for yourself or your loved ones in the future. So there's a little more going on in assisted living because a little more activity, people are more active because they're just more capable of doing that at that stage of their life. Okay, so let's skip over to care options and costs. Now I think this is the same page we looked at. Yeah, okay, so care options and costs. So for publicly subsidized care, there's a variety of arrangements. There's things like community nursing, and it's a great long list here we're going to see of things that can be helpful and help you to stay in your home, which of course is the number one option for most Canadians. That's at least the number one preference. So community nursing, community rehabilitation, adult day services, so it's provides some daily support, home support, so helping directly in the home, In British Columbia, we have a program called Choice and Supports for Independent Living. And if you're providing care, then you can get caregiver respite or relief. And these are all great. These are great services, and they can all be very helpful in keeping ourselves or our loved ones in the home as we age. However, these programs are stretched very thin. Services, the government provided services are barely available and primarily doled out to the most urgent situations. And so let me give you an example of an urgent situation. Of course, we have the same lineups to get hip surgery that are all over the country. But when you finally get in for hip surgery, or knee replacement surgery is another big one, then you're looking at weeks of recovery, and you definitely need, depending on your age and your level of fitness, at least a couple of weeks of serious in-home assistance. Because if you don't get that, then you can compromise the surgery, and they won't release you out of the hospital. In fact, they won't even take you into the surgery if you don't have that. But let's imagine that they did it on an emergent basis because you fell and broke something, replace your hip. Well, if there's no one at home to help care for you, they can't release you from the hospital. And so they're going to use the resources that are allocated for the community to get these people to get you out of the hospital, because the hospital beds are very expensive. And so they want you out of that expensive acute care bed back into your own home. And so that's where a lot of these resources are getting used up, is in those types of cases. And demand for in-home support and all sorts of other levels of these kind of community-based supports just significantly exceeds supply. In addition, these organizations are having the same struggles hiring people that many other employers are. So there's an employee shortage. That just means that if you're going through the government subsidized system, that you are going to be at the mercy of the availability. So even though you may qualify, you may well just end up on a list that cannot ever really be completed of people who need this kind of support when you're waiting for government assistance on this. Okay, so we've seen this. So this is just an explanation of what long-term care service is. You know, we have assisted living and long-term care in British Columbia. And in long-term care, it's an extensive list of supports that you find for people that really need it. So the question is, so for long-term care, the eligibility criteria are for people who have severe behavioral problems on a continuous basis, are cognitively impaired, physically dependent with needs that require professional nursing and a planned program to retain or improve functional ability, or clinically complex with multiple disabilities or medical conditions. So when you get the assessment says that you've been assessed and you need 24-hour professional nursing supervision, and you're at significant risk if you remain in your current living environment, which would often be your home or the home of a family member, and et cetera, et cetera. So then when you go to the eligibility criteria, they're going to put you through this matrix and determine whether you meet the need assessment for a particular level of care or assistance, and what type of support or assistance you need. And again, there's that long list, which is great. They're great services, and we live in a great country that has those services, but they are in extremely short supply. And so just because you qualify or are eligible for them doesn't mean that you can access the government services. Now, almost all of these services are also available privately. Once you get into the more complex, like long-term care services, that is available privately as well, to a certain extent. So any of these can be accessed privately, which is why we want to have the money to do that. So how can we do that? Let's take a look at what we can do, some of the things that we might do. The first we're going to look at is critical illness insurance. Now, there used to be in Canada long-term care insurance, but it is largely gone from the scene, unfortunately. We were, back when it was available, we were told, well, really best to get it once you reach age 50 and beyond. Unfortunately, for a variety of reasons, most insurers, and this is both in Canada and the United States, have discontinued long-term care insurance as a product offering. There are a few kind of bare shadows of programs available through new providers now, but they're really not what you need in order to be confident that you are going to be cared for in the manner that you would wish to be. Okay, so what can we do? Well, there's two things we can do. We can save a whole big pile of money, and the other is we can get some forms of insurance. Now, let me just mention one thing here. One of the real financial disasters that can befall people, often in a marriage, you may have a husband who's, say, 10 years older than the wife. And the husband already has a shorter life expectancy, and so the wife may be facing widowhood for 10, 15 or more years. In addition to that, if a lot of the family's resources have been run through or exhausted through caring for the husband in the end stages of his life, which often happens, then we find the retirement resources severely depleted, and the widow then having to go on to living with a reduced standard of living and without any ability to get long-term care support in the long run for her. So this is why it's really important to set up these tools to deal with long-term care as well, so that it doesn't compromise and undermine your finances. Okay, so let's take a look at critical illness insurance. Just, what is that going to cost? I'll zoom in a bit here. Okay. Okay, so let's start a little earlier if we can. Let's start when we're 40 years old. Even better to start earlier, but that's fine. This will be for our man, our husband, non-smoker, regular health category. Now, look at that. There used to be critical illness insurance in here. Isn't that interesting? Okay, never mind. I'll pull up another tool. Okay, so let's pull up a different tool for that. Just bear with me one moment. Okay, so critical illness insurance is available quite similar to term life insurance or to life insurance. You can get it for 10-year term, 20-year term, or you can get it for to age 75, or you can get it to age 100 for life. Now, in this case, we're going to look at long-term care insurance that goes to age 100. That's because we don't know when we're going to need it. And we're going to use it for critical illness insurance. And that we don't know when we're going to need it. So we want to be sure it's going to be there when we're old. I think average or typically people are in here we go. People are in care for 2 to 2.5 years maximum. Now, obviously, some are in care for much longer, but and many for shorter periods of time. Okay, let's go back here and look at our. Okay, so I'm just going to add this on to a case I've already been looking at. And we're going to go look for critical illness insurance. Now this person is actually, we'll just, age 34, so we're starting a little younger. Now we want to go for, you'll see we can select term to 100. We have different options. I don't think we're going to want to pay past our retirement date. So let's go with that. There are some interesting bells and whistles you can add on. We won't look at that for these, but you can get your premiums returned to you if you never make a claim. Now, we're going to look at this for life, so we don't need to add those bells and whistles. So let's see what that's going to cost. How much did I set? Oh, that's 500,000. Sorry, that's a silly amount of insurance. I'm going to say let's go with 150,000. Okay. Oh, why do we only have Blue Cross here? Maybe they're the only ones that offer the term to 100, pay to 65. Let's go to the term to 100, 10 to 20 pay. Let's just go to term to 100 life pay so we can get a result. All right, so we can see that that is going to run us $112 a month. And these numbers are for basic. This is the first one. So basic only covers usually 3 or 4 conditions. The main 3 conditions that get covered with critical illness insurance are heart attack, stroke, and cancer. And because that's what the vast majority of critical illness claims are from. And so it's a little less expensive if you only go with those 3. But the more robust coverage has 26 covered conditions, including cognitive impairment through either brain injury or through physiological problems like dementia. So you'd be looking at $143 a month to get $150,000 worth of coverage, and that's, again, paying for life. Now, a lot of people will ask, why is it expensive? Well, here's why term life insurance is cheap. It's because you're likely not going to collect on it because you're just not that likely to die before you would need your term insurance to pay. So you're going to outlive your term insurance. But critical illness is another thing. You're much more likely to get a critical illness. In fact, if you're a married couple, there's a greater than 50% chance that one of you will get a critical illness in your lifetime. And with critical illness insurance, you receive the benefit, you receive the lump sum benefit. In this case, we're looking at $150,000. You receive the lump sum benefit on diagnosis. So doctor says, yes, you have breast cancer, or you have a heart attack, or you have a stroke, that kind of thing. It's just going to pay. It's quite black and white. So the underwriting's a little more rigorous even than it is with life insurance, a little tougher to get because it's more likely to pay, and it costs more money, again, because it's more likely to pay. So that just gives you an idea. This is for a 34-year-old male who's going to be making those payments for life. But that gives you one war chest to deal with. That gives you $150,000 for whatever purpose you need it for. You can use that money for whatever you want. You just get a check. So, of course, you could use it to provide long-term care. Now, another alternative, and we're going to go into much greater detail on this in the future, is to use just when you're getting your life insurance, to build up a war chest inside there, because there's a lot of tax advantages to do so, for your that you can use if you need it for critical illness coverage, for long-term care when you get older. And so I just have an example here. And again, we're going to go into much greater detail about these types of plans after next week. But here's just an example of a plan. It's just tacked onto or added onto a term life policy. So in this case, it had term 20 life insurance plus a cash value life insurance portion, a small cash value life insurance portion to go with it. So the total life insurance was $1.1 million, but over $1 million of that was the term 20. But here's what's happening in the cash value policy. So premiums are getting paid for this life insurance. And normally with term insurance, of course, your premiums are just a sunk cost. Unless you die and collect, once the term expires or you let the coverage lapse, the money is just gone. And again, that's why it's less expensive. But here, if we, as we can see, now this started at age 35, so not quite perfectly aligned with our other example, but close enough. This starts at age 35. Not a lot of accumulation in the early years, but even by the time they get to 50, there's $50,000 of accumulated value in there. This money can be accessed tax-free and used to provide that long-term care. And as you see, as we get in latter stages, age 65, so at retirement, you've got $128,000 accumulated. Age 70, age 75, now you're starting to get more into the years when you would pay or when you might need this, and now you've got over $200,000, $250,000 worth of cash value that you could access. Let me also point out in this policy that the premiums on this policy only lasted for 20 years. They didn't pay any premiums after 20 years. So this can be another alternative, and in fact, often when we're putting together a strong long-term care plan for folks, we'll use a combination of critical illness insurance, cash value accumulation, and maybe some return of premium inside the critical illness policy as well. So that gives you a very strong, also within this policy, by the way, the really many life insurance policies, you can also access a disability benefit, or if you have a catastrophic disability, or you may be able to access a critical illness benefit out of your life insurance value if you've been diagnosed with an illness and only have 24 months or less to live. Now, you have to have been diagnosed that way, you have to have a doctor who affirms that, and you can access, depending on the carrier and the policy, up to 25% or 50% of the face value of your policy while you're still living. So the combination of those three factors can make for a robust toolbox to deal with long-term care. And again, unfortunately, there isn't the simple long-term care insurance that's got great value that's available in Canada. I think insurers just found a combination of it was difficult, financially risky to underwrite, and also not that widely taken up by the public. So it's unfortunate because it was the easiest tool there was, wasn't particularly inexpensive, but it was a very focused and dedicated tool. However, these other alternatives present a great option in order to accomplish the same thing with the tools that we have available that also have great flexibility if you end up not needing them for those purposes. All of these options have great tax treatment as well. So you can end up saving a fair bit of money in taxes with, particularly with the cash value approach in the life insurance. So that gives us, I think, a pretty good look at what we need to do to put together a well thought out, strong, and robust security plan for our long-term care. So I really encourage you to think about that, to be to get a plan in place. It's just so important to do so. The younger you are, the easier it is to get started, and the fewer resources you're going to have to dedicate to it. But I think all of us know someone who's had to care for a loved one, a parent, a grandparent, a spouse, as they've aged and needed care. And certainly those who've had resources have been able to do much better than those who don't. And let me just kind of highlight the one last thing that I think is really important about having a long-term care plan. When we are dealing with limited resources available to access, and especially when we're dealing with government allocation of those resources, we really lose options. And the two greatest options that we see people losing, and you read about them regularly, tragically, are the ability to remain close, like geographically close to our loved ones, and the ability for elderly aging couples to stay together. People who require differing levels of care often can't get into a public facility or a publicly subsidized facility that can support them both. Those are more expensive to operate, and the government just hasn't really done much in that realm with their limited resources. So to stay together like that, you're often needing to access private care and private systems. And so tragically, what we see as they go through the end stage of life, one spouse ends up in a care facility that I was recently reading about one where they were an hour away from their loved one, an hour's bus ride. The spouse who was still living at home was elderly as well, and really not up to an hour's bus ride each way to see their spouse. And so they became separated and really couldn't see one another much. A very lonely prospect for both of them, and a very isolating one for the spouse that was in care. And so we really want to be able to have the options to build whatever we can in our latter days in life, so that we can stay together with our spouse, and whether that's remaining geographically close to them, or even preferably still living together, even if one person needs care. And very, very difficult to have those options when you're dealing with scarce government resources being allocated in a hurry. So I hope this has helped you to think about a very difficult topic. I hope that you are thinking about it, and I'd be happy to have a conversation with you. We have 5 aging parents. We have 5 parents over 80 ourselves, and thankfully, all of them are still living in their own homes, but I would expect some won't be soon. And we'll be navigating those choppy waters as well. So I want to thank you very much for joining me today. Again, thanks to our sponsor, the Simple Plan Community. I encourage you to join there at facebook.com/groups/Simple Plan Community. I'm going to put that in the comments. And I encourage you to come there, join us. We discuss all these topics, support one another, and come up with different options and ideas, or even sometimes just a sympathetic ear. Also want to encourage you, if you'd like to talk about this or any of the topics in our, well, first I'll say you can subscribe to our weekly update. So that's go.getthesimpleplan.com/subscribe. And you can sign up for our weekly newsletter there. There's our Facebook address. And you can sign up for our newsletter. go.getthesimpleplan.com/subscribe. And then finally, if you'd like to book a time to talk about these things, any of these topics in our 7 steps to retirement security, if you want to get together and discuss, have an introductory 15-minute chat on any of these topics, I'd love to talk to you, point you in some directions, give you some ideas. You can book a free consultation at go.getthesimpleplan/calendar-new. That's at go.getthesimpleplan.com/calendar-new. Come book a time. I'd love to meet with you and talk about this or any other financial topics you have on your mind. See if we can help you in any way or just get to know one another. Really appreciate you being with us today. I hope you have a great week ahead. And I look forward to next week, where we're going to go to the final event in our 7-week series. We're going to be looking at what it means to be using your house and wise and not so wise ways to use your house, if that's what you're thinking of or that's what you need to do in your retirement. So we'll be with you next week and look forward to that. All the best. God bless. Thanks.